So let's just start quickly with your reaction to the jobs report and the markets. What does that immediately have you thinking?
I have to focus on the 10-year note. I cut my teeth in the futures rates in Chicago, you know that. So when I see a move like that in the 10-year note, I think short term we will see equities come up for air a little bit because at 4%, that was a really important yield. We went down 375, all the anticipations of another 50 basis point rate cut being baked in, rates should be getting lower. So that short term is a headwind. On top of the other headwinds, we have something going on in 30 days I kind of forgot about too.
The election.
Yeah.
Yes. On the 10-year in particular, there's always kind of the two different reasons that it goes up. It can go up for bad reasons like inflation or deficit concerns. It can go up for good reasons, and maybe today was one of those.
You're not wrong, and I don't think it went up for any other inflationary scare reason. It's actually a strong economy. We see strong economy. Obviously, it's bifurcated in some sectors. Nonetheless, I think that yield higher is just going to catch some people off guard. And I see rate-sensitive names, high-flying beta names like the technology stocks. That's where I have a little bit of pause going into today.
We've talked, since the summer, really, you've talked about your concerns with NVIDIA, and the shares have not done much lately. Even today, as Jim Cramer was saying earlier, he's not very impressed by the trading behavior, but they've kind of held in there.
They have.
You're continuing to trim. Do you own any of it still? Or?
I own all of it. So I've actually owned Facebook, Meta. I'm old enough, Kelly, I can call it Facebook.
But you had that since the IPO?
Since 2012. But we continue to manage position. I think that's what's so important. And what I want to talk about today is managing positions, where you see Meta at an all-time high, up at 591.
Incredible year.
I think you have to realize what's been the last $100. Just a couple of weeks ago, it was trading $495. I know we have new glasses, and supposedly we're not supposed to use this anymore. We're all going to be using glasses. I'm not buying into that, where I think that $40 billion CapEx expenditure, I want to have something more tangible. So I think it makes a ton of sense to trim Meta, to trim NVIDIA here, and look at a name like IBM. I know it's boring, but that's a cloud. That's a $200 billion small. You want to call it small cap, but compared to NVIDIA, you see value there, and their cloud actually is producing. They spent about $7 billion in all those 15 companies they bought at IBM, but all of a sudden you're seeing $2 billion in profits. In Palo, you have to measure the AI theme hand in hand, lock and step with cybersecurity. Palo Alto, I know it's been a laggard. When you look at a chart of all these high screaming beta names, you see Palo Alto potentially having upside capabilities.
I think Zuckerberg became the second richest American.
He did, and I'm not throwing shade on the hoodie.
It's more you wonder if it's the old Munger thing of kind of having fewer things that work really well and just kind of sitting on them.
It is, but it's also the transition. I want to see, I think, a lot of older people. I just hit 50, Kelly, so here I am. Now I'm considered old, but nonetheless, the Facebook users I know, and I know Instagram is a big piece of my teenagers utilize, but I think it's really important to understand, will they transition into actual revenue? Will they actually have the ability to take all that capital expenditure and make it happen? Very different story like IBM. And I know it's a very small scale. It's 1/10 the size. But I think right here, right now, you have to trim, take that profit, because you're not going to go broke taking profits. You never have.
You worry that market overall could be in for a tougher slog for the next year now?
I think we've had concern. We've had this conversation before. The top leadership, the top 10 stocks in the S&P 500, they got a little elevated away from the historical average, down at 21%. I think it's still about 35%. So I do get a little concerned. I think there's more anxiety, not just going up to November 5th, but subsequent to that. If we don't have clarity, I think you could see volatility. With the VIX at 20, I think there's more opportunity for volatility to cloud decisions here in the short term.
We should check on that today. Is it a level that tells you there's still some lingering concern?
It is. And I think volatility, sometimes, when you see that acute move, look in the early part of August, you saw the VIX fly up. So it's very hard to price and measure that. But I think with all the global macro headwinds in conjunction with earnings seasons coming up, I think if you have a high flyer profit taker, take it down, maybe equal weighted, and be considerate going into the fourth quarter.
So is this a picture of maybe stronger economy, weaker stock market for you for the near term?
I think stronger economy and some of the big names, the high flyers, are going to see profits book. That's why Meta, that's why NVIDIA, I think, stay stagnant or come down a little.
All right, Jeff, thanks for your time coming on set.
Kelly.
We appreciate it. Jeff Kilburg, KKM Financial.